We are not seeing a crash, but we are seeing something more subtle. The S&P 500 keeps pressing towards 7,000 and failing to hold it, and leadership is rotating under the surface. That is where the real story begins. At first glance, the index looks stable, but stability at the top of a range often hides internal stress. Software and AI leadership is no longer carrying momentum the way it was. Capital is rotating toward energy, staples, and defensives. That shift by itself is not bearish, but it does change the character of the market. When leadership narrows, breadth weakens. When breadth weakens, fragility increases. Fragility does not mean immediate decline. It means the system becomes more sensitive to shocks. Liquidity can delay that sensitivity. Passive flows can mask it. Policy expectations can suppress it. But rotation tells us capital is quietly repricing risk. Energy strength is another signal. Energy equities are firm, yet oil prices are not fully confirming the move. That divergence suggests narrative positioning rather than confirmed demand acceleration. If reflation fails to materialize, those trades can unwind quickly. At the same time, inflation data continues to drift lower. Housing softness feeds that trend. Disinflation pressures duration assets differently than cyclical assets. So the market is debating two regimes at once. Is this a healthy rotation inside a continuing expansion phase? Or is it the early pressure of a phase transition? In our framework, this looks like late phase 2 behavior. Index stability, internal rotation, rising volatility beneath the surface. If you find this type of probability-based breakdown useful, consider subscribing. We focus on mechanisms, signal tracking, and phase sequencing, so you can better interpret what markets are doing in real time, rather than reacting to headlines after the fact. Now, what would push this toward a true phase shift? Credit spreads widening materially, breadth deterioration accelerating, energy leadership failing while growth does not recover. A sharp dollar strengthening cycle. If those cluster together, transition probability rises. If they do not, rotation may simply reset positioning before another attempt higher. This is educational analysis, not investment advice. The key is not predicting which path wins. It is recognizing that internal pressure is building and tracking whether it resolves to expansion or repricing. We do not need to be early, but we do need to stay observant.